Hello traders, let's be real. Passing prop firm challenges is like walking through a minefield in the trading world. One wrong step and boom, it's game over. Most people crash and burn here, leaving empty-handed. But hold up, today I'm about to let you in on a huge secret. My personal strategy that's helped me crush challenge after challenge like it's a piece of cake. This method's got an insane win rate and is so powerful it's become my all-time favorite. Wanna know how? The keys and the filters you'll get by the end of this video. Just stick with me till the end, because your trading life's about to change. Usually, traders don't teach their personal strategies, but this time I want to share something with you that I'm really passionate about, and that's helped me make some really good profits. As you know, the market is made up of three main phases. Basically, all market movements fall into these core phases, and there's nothing outside of them. The first phase is the spike. Obviously, this is the strong, trending moves that happen in most parts of the price action. The second phase is the channel. This one's known as the second phase, and as the name suggests, it moves like a channel and has a slower pace compared to the spike phase. The third phase is the trading range, and it's pretty clear what that is. The price moves within a specific range, and they say the price is in a state of indecision. This strategy is called PR1. The strategy we're going to learn today falls in the channel phase. Let me just point out one thing beforehand. This strategy might look familiar to you at first glance, but what turns an ordinary strategy into an amazing, powerful, and money-making one are the filters and tips you need to consider when applying it. So listen carefully, because the most important part of this strategy is its filters and tips. First, the price makes a spike, and after that, a correction happens. Then, after this correction, the price moves again, forms the next wave, and breaks that correction level with strength. Think full body candles. Now, after this breakout, the price pulls back to that broken zone and continues moving in the direction of the spike. We use this exact method to spot the start of the channel phase. In other words, based on the definition, we say the channel phase begins when the price pulls back to its first correction. Don't worry, I'll explain it fully with examples later, and you'll get it perfectly. To make this detection easier to learn, we'll mark it up. We call the starting point of the first correction A, and that helps us know where we've identified the correction. The end of the first correction is called B. Now, the price moves and manages to break level A, heading toward the next correction. We call the starting point of the second correction C, and finally, the pullback zone to the first correction is labeled D. So now we've got the full structure and know that the price moves in an ABCD pattern, and that's how we trade with this style. Entry points. Every strategy needs a clear entry point. In the strategy we're learning today, there are several different ways to enter, and I'm going to teach you the best entry points. Entering on a signal bar candle at point D. By signal bar candle, I mean the candle that once you see it, you can jump into a position. For example, a pin bar or an engulfing candle counts as a signal bar. When the price is at level D, if a pin bar forms on that level, we can enter one tick above that candle. In a bearish setup, it's the same deal, just one tick below the pin bar. Entering on a key bar candle at point D. By key bar candle, I mean the confirmation candle that comes after the signal bar and kind of confirms that signal bar. For example, let's say a pin bar forms at level D, which we can take as our signal bar. Now, we wait to see if the next candle forms as a green candle with a relatively strong body. If it does, we can enter the position at the close of that candle, which is known as the key bar. Another entry method is with a pending order. This means when the price is forming the second correction and is at point C, we can place our order on level D ahead of time, before the price even gets there. As soon as the price hits that level, it picks up our order and moves in its direction. If you're in your early years of trading, I wouldn't recommend this entry method because it's riskier compared to the previous entry points. If you're a beginner, you can stick to entering on the key bar, which is a safer option. Stop-loss zones in this method are also really different, and you should pick the one you're most comfortable with based on your own understanding. Placing the stop-loss behind the signal bar, When we're entering with the signal bar candle itself, we can put the stop loss behind that same candle. For example, if we're entering one tick above a pin bar, we can place the stop loss just a bit below that pin bar. Another option is placing the stop behind wave B. When the waves are close together, behind wave B is a safe zone for the stop loss. Another way is placing the stop behind the candles between C and B. You can put it behind any of those candles in that range. A super important tip to keep in mind: you need to pick just one stop loss method and stick to it. You shouldn't keep changing where you place your stop. For example, if you decide your stop goes behind wave B, you should always use that method and not switch it up every time. If you keep changing your stop placement, your win rate will shift too, and you won't reach consistency in your strategy. Final filters. 1. We said it starts with a strong spike, followed by a correction, then a pullback to that correction, and that's how our strategy takes shape. But even if there's no spike, you can still enter with this strategy. For example, the price might be in a trading range, and after breaking that trading range, it enters the channel phase. We can then find the ABCD zones and enter a position. 2. The breakout candle absolutely has to be a full body candle. That means the candle breaking level A needs to form as a full body candle. If that level gets broken by a candle with a shadow, then that level isn't valid for us anymore and we won't trade it. 3. The correction from A to B has to match the correction from C to D, both in terms of time and price. For example, if the A to B correction took 3 candles and about 3 hours, the C to D correction should have roughly the same number of candles and take about the same amount of time. I don't mean they have to be exactly identical, like if the first correction was 5 candles, the second has to be exactly 5 too, and if it's 6 it's invalid. No, I just mean they should be roughly similar, about the same size in terms of candle count and time. 4. The starting points of corrections A and C shouldn't be major reaction levels. For instance, where correction C begins shouldn't be a key resistance level, because if it is, that resistance will increase selling pressure, and that'll seriously lower the strategy's win rate. So pay close attention to this tip. 5. To boost the win rate even more, here's another tip. Level D can line up with the EMA at the same point. That means where the second correction ends and level D forms, the EMA can be right there too, supporting level D to increase the win rate of this strategy. For the EMA number, I use 20 because it gives really good results. Alright, if you're ready, let's go check out a few real examples together. And if you've enjoyed the video, your support means a lot to us and helps us make even better quality videos for you. The price is in a bearish spike here, and a green correction candle forms, which gives us our A and B points. After that, the price breaks level A with a full body candle, and the second correction, our C and D forms. At this level, we look for a signal bar, and here a pin bar shows up. We can enter a sell position 1 tick below this candle. For the stop, we can place it behind this candle or use one of the other methods I explained earlier. And beautifully, it hits our target. Here's an example with bigger corrections. First, we mark levels A and B, and we see this level gets broken with a full body candle. Now, the second correction sets up C and D. The price reaches that level and forms a green pin bar. We can enter a buy position 1 tick above this pin bar, place the stop behind it or use another method, and beautifully the target gets hit. One thing to note, the C to D correction here was really deep and pierced into level A. These kinds of corrections, since they're so strong and penetrate the previous correction, have a lower win rate. It's better to trade the ones where level A doesn't get pierced. In this example, as you can see, the price was in a trading range, and after breaking the trading range, it pulled back and formed the first correction. Now, with the next correction and a pullback to that same level, which also counts as a pullback to the trading range level, we can enter a buy position with a key bar candle. We place the stop behind the 2 candles before it, and we see our target gets hit. As I said, This strategy is one of my most favorite personal strategies that I use a lot and have made some incredible profits with. I'm sure if you use the strategy along with the filters and tips I've taught you, after enough practice and backtesting, you'll definitely get great results from it too and be able to pass your prop challenges easily. If you've got any questions, feel free to ask in the comments so we can answer them. Don't forget to support us. See you soon.